Hi, I am Alexandra Whittier Sharon. I'm the CEO and president of Empress Royalty. Empress is a royalty and streaming creation company focused on getting mines into production or helping mines expand their production capacity. We have a globally diversified portfolio of revenue generating assets, and we're looking to increase that portfolio, bringing some new additional investments in through our pipeline. The management and team, we have over 250 years of experience, completed over $6 billion in mining finance transactions, and we have a strategic relationship with Endeavour Financial, providing us with unique access to deal flow.
Hi, Jonathan. Good to see you. It's been a while. Was it something I said? I think I've seen you since September 2021. It has been a while. Good to see you. And I know you've been busy, sorting things out. So maybe a little kind of catch up as to what has happened since I last saw you in September 2021. What have you been focused on?
We've been focused on the portfolio and revenue coming into it. So I think when we last spoke, we had just made sort of our initial investment into Sierra Antipite, which is our Peruvian asset. We completed that investment. We increased our investment in one of our assets in Mozambique. And with all of these sort of over the last year and a half, the revenue's been coming in from, as I said, Peru, Mozambique, and now the revenue's coming in from our investment in Mexico.
Well, yeah, I think I caught up with Mike Southers recently, a good appointee down there. Luca Mining, they're called now, Altale of old. Look, I want to talk to you about how companies like you, I guess, stay relevant. In the sense that you're of a certain size, you have been for the last 3 years, right? So I get let's get focused on revenue. That's important. You kind of nailed that, but now you need to kind of move through the phases somewhat. So from the base that you've got, access to capital is going to be important to you. So when you're speaking to these kind of credit facilities, what are they looking for in you? What do they see in you? Why will they give you money?
A lot to unpack there. I mean, we've been around for just 2.5 years. So we launched it with the concept, with some exploration royalties, and we've layered, as I said, the development and revenue producing assets. When we first took on our debt facility, which is around the time we talked last year, or a year and a half ago, we had one producing asset of about $100,000 a month coming in. We've now and we had no credit rating. We were a new company. So we really have proven that out with the revenue coming in and building ourselves out. And that's what we're looking to do. We are in discussions to increase our debt facility now, and to be able to continue to build the portfolio out.
Right. Okay. So you are being listened to. You're having conversations. I guess that's a question of the cost of that capital to you. Again, how do they judge that in terms of the kind of security that your current revenue flows give you, and more importantly, give them? Again, what do those conversations look like?
We're having different conversations with different groups, but our credit ratings definitely. We're a much more secure company now with the revenue coming through and into the company, and with that, we'll be able to bring our cost of capital down and continue to drive it. So when we look at the debt facility, the price of that, it has to be cheap enough for us to be able to bring in a new investment that's at a higher IRR. So if our cost of capital is, say, 20%, the investments we're looking at are north of 30%. That 20% number is not correct. That's not where we're at now. I'm just using that as an example, just to clarify. But we are looking at bringing the cost of capital down, which will then allow us to increase the portfolio, bring new investments in without having to dilute our shareholders.
Right. Okay. So you talked about, obviously, giving some examples of current revenue flows. And I think in your PowerPoint, you talk about invested 19.5, projected revenue 54 million. So it suggests, slightly over, 2.5% type return over the next 5 years. I think specifically, obviously, it will hopefully, life of mine's longer than that. But you're going to have to build up a portfolio now. So if you're getting access to new credit facilities, capital in whatever shape that you bring it in, you're going to have to be competitive. There's a lot of groups like yourself going after the same types of assets. You are gold, silver, you focus on precious metals. So what advantages do you have? Why are you going to be able to pick stuff up at reasonable rates and therefore be competitive for your shareholders?
I think it's really important to note there are different types of royalty and streaming companies, and we often we're all the same. We're competing for the same investments. In the Empress's case, we're not. We are. There's stepping back. There's 3 types. There's the exploration generation side, so inexpensive, easy to acquire, but there's no guarantee it'll become a mine. And if it does, there's a very long lead time to revenue generation. Then the second category is buying third-party royalties. The royalties already exist. So again, it's pretty simple acquisition. It's just a matter of trading paper, but it's become highly competitive. You're part of a competitive bid process. You're paying a premium, and historically the returns are low. And most important to me in this one is you don't have a direct relationship with the mining company. At Empress, we haven't been in a competitive bid process to date. We're focused on origination and creation, and that's really leveraging off our experience. So, we're able to structure these agreements that work flexible, that work the goals of all parties, and really drive that revenue and focus our investment dollars into revenue creation. My background is I'm an ex-investment banker from Endeavor Financial. I'm working with my old team at Endeavor. We know how to structure these complex streaming agreements. And what we were seeing is companies like Wheaton and the larger streaming companies are doing bigger and bigger investment sizes, and no one was providing this financing solution to the junior side of the market. And that is why we set up Empress. And that is our competitive advantage. We have the relationships through Endeavor and our management and board. We know how to structure these more complex structures, and as a result, get amazing returns. And we've had the concept and the strategy. We are now at the point, after talking to you last, where we're demonstrating that revenue is coming in with those strong returns.
Right. I think we talked about that. I do remember that last time in terms of the ability to find good companies which are likely to get into production, because that's when the rubber hits the road. And I do remember that conversation about how you do that. But coming back to the scale is the issue for you guys, because you may have contacts and you may know people, and that may put you ahead in some aspects, but you're also going to need to demonstrate how you grow this company quickly. So access to capital is one thing, but finding the deals which will bring in the revenue at scale for you guys, that's the tough one here. Or maybe market conditions are in your favor. I don't know. Tell me.
Yeah, I mean, for us, we look at a lot of opportunities again that come through our network. We've rejected over 4 deals over the last 14 months. We are not a company that is doing multiple deals. We're focused on quality over quantity, and that has really been our business strategy, and that is bringing the revenue in. We are a long-term growth story. I believe we are at that point of rapid growth with the demonstration of the portfolio with the new ones we're looking at. I've rejected 4, as I said. There's 2 we have exclusivity on now. We're through advanced due diligence, which means a third-party engineer has been to site on both of those, and we're going through the final portions of them now. But we're all large shareholders in this company. We're experienced in this industry. We are not going to make an investment and be pushed into making something that doesn't make sense, that won't provide great value and returns. Because again, we're all large shareholders in the company, like our shareholders as well.
Well, it's just like demonstrating management and shareholders, no matter how much equity you hold, you guys are on salary. So I want to focus on the growth of the share price, because that's how I would make money. I'm buying at one price, I've got to sell at another. So talk to me about this kind of this vetting process that you go through. Do you mean you look at about 100, you choose 4 to kind of diligence it in more detail, and then you've rejected those? Or is that deal flow, you see 4 projects a year, or 14 months, I think you said. How much is out there to be had?
100, definitely not. But there are different deals that come that we see, and they're ones that we know the management team, they're at a point now where they want to advance the project. Due to the equity market, there's a gap. So we provide, they can't necessarily raise the equity. They've got a bit of debt. We can come in there. There's other scenarios where they're private and they don't have access to the equity markets. We have looked at several deals. There are ones that we haven't even gotten that advanced on because that's either too early stage, the location we're able to structure there appropriately, or they have too many constraints in the project for a streaming or royalty structure to be successful. So we don't have a shortage of opportunity. It's finding the right ones that fit our goals right now. We have been very much focused on deals that are either in production or within 6 months of production. And that's to get the revenue coming in that we can then reinvest into the portfolio. There are ones that are earlier stage that I'd like to look at that are, say, 18 months in production. But right now, we need to have that solid revenue base coming in and bring down our cost of capital by doing that.
Right. Okay. And just talk to me about in terms of where you look. Because you talk about, again, presentation and news press releases talk about, we look globally. We're global, right? So Mozambique, which most North American royalty companies, all streaming companies probably wouldn't look at. Mexico, probably more likely to, and Peru, I think, of late has become much more attractive for sure. But is that an advantage to you, being able to go and look globally and have a little bit more, I guess, not risk per se, but global view than some of the other streaming companies out there?
We are looking globally because we're able to get better returns, but it's also leveraging off our experience. Endeavor and the team and management team have been operating in Africa and South America since its inception over 30 years ago. So we're going in jurisdictions we've operated in before. We know how to structure in those jurisdictions and able to get great returns as a result. We are not going to be going into Canada or the US necessarily. We will be going into countries in Africa and South America, but our portfolio IRR is 30%. And we are higher risk and we are getting better returns as a result of that.
Right. So you're saying, wait, because you've talked about you have some of the portfolio in Canada, don't you?
Those are just our exploration portfolios. So
those are just the exploration,
yeah,
right? Okay, earlier stage. Okay.
Yeah, probably get to sort of like this recap right here on what's in our portfolio.
Yeah.
So we started with the exploration royalties, and that we picked up as part of our direct listing onto the TSXV. We carry no book value on those. We then invested the $19.5 million into 4 investments. One is a development stage in Mexico. One is the Talahueto mine, which is now getting into production. Another one was the Mozambique mine that was development, now in production. And then we have the Serendipity mine in Peru, which we helped them expand the production. So we are very much focused more globally and on mines closer to production.
Right. Okay. Gotcha. And what are you going to do with those assets, the Canadian ones that you inherited?
There's some great ones. I think Goldshore is working on one of them at the moment. But for right now, they're part of the portfolio, and we're much more focused on the revenue producing assets.
Okay. Cool. Okay. So just in terms of what the next 24 months looks like for you, is it just more of the same, or is there something sparkling in the distant future that we should be aware of? In terms of this growth story that you need to tell?
I think increased revenue is not nothing to be shied away from. Consistent revenue coming in, which we're just getting to that point now with Talahueto coming on board as well, with that silver credits coming in. So we've got the Peruvian one still ramping up, the Mozambique one's ramping up, Talahueto owned by Luca, they're at 500 tons per day. They're going to be at 1,000 tons. Mike Struthers is expecting by the end of this year. That's if we did nothing else. That's over $7 million in revenue this year. As you mentioned earlier, over $50 million over the next 5 years. The excitement is bringing new investments into the portfolio, and that's what we're looking to do. Exclusively on 2 opportunities, both in Africa, both the producers helping them expand production. And again, that will help bring further revenue in, which we can then deploy back into the portfolio and maybe do some earlier stage, meaning within 12 to 18 months development stage projects into the portfolio. But it's continue to find these excellent assets that are bringing the revenue in.
I did kind of reference that earlier, which is the kind of state of the market, right? So for royalty companies and streaming companies alike, these tend to be good times in terms of the inbound, companies desperately looking for alternative means of financing, but the quality is, I guess, the debatable component and the element that you need to focus on. So have you... Again, how you talk about having access to market, but does the market conditions like this, is it a good time for companies like yourself? Should you be able to take advantage of it?
Yeah, there's a lot more opportunity right now. It goes both ways. So when the market's really hot and buzzing, you have quite a few private companies that want to go public, and there's opportunity there. But right now, there's a lot of companies that were sort of moving their way along. Costs maybe have gone up over the last 2 years. The equity markets aren't there for them. We're able to step in and provide some opportunities for them for financing. And you were mentioning again about vetting these projects. It comes down to 3 Ps. The people, and that's where we're able to use our network to establish who these people are, the places we're comfortable going in, jurisdictions that we know how to structure properly, and then the projects, and that's where we have an engineer on our team. But I also have access to Endeavor Financial's entire team of mining engineers, geologists, to be able to vet these deals, to understand what the geology is, the mineralization, what the metallurgy is, to be able to really build these mines out, and what the management team's capability is to operate these mines. And then once we get past that desktop review and we can agree with some terms that, again, work for them in the big picture, then we're doing third-party technical DD, and that's with us going to site. And we hire specific groups that know that region, that mineralization, that geology, to be able to give us a real fatal flaws test on the projects before we advance even further than that.
Right. And final question. Okay, and it's a little bit left field. In kind of markets like this, where the equities markets have been absolutely beaten up real good, no matter what sector, what commodity you're in, it's beaten up real good. Do you ever wish you'd kind of maybe stay private, or done this as a private entity rather than a public thing, or do you think there's some real upside to be had? So
I think there's still definitely some real upside to be had. I think that staying private didn't give us the ability to grow the way we wanted to, and I think there's this huge value in this. With the equity markets being where they're at right now, again, it just creates a lot of opportunity. We were also able to, we could have done since we last talked, we could have done more investments in the last 18 months, but we have sat back as the market we knew was going to slightly go downwards, and that's given us more opportunity now. And it's timing that market and working out when we should be doing deals and when we should just allow the revenue to come in is part of our overall strategy as well.
But why is that kind of purest view of yours better than some of, look, I'm not going to name names, I'm sure you won't either, but you are aware, because I've spoken to lots of royalty companies and streaming companies, and some good ones and some bad, but it's clear that there is a model which is just pile in the deals, just do the deals. You're going to get a multiple of X on everything you put in there, the good, the bad, and the ugly. Why have you kind of got this purest view of trying to say we've got to try and do the best thing we can, because it's about long-term value?
First of all, we get asked that question a lot when we're comparing ourselves to peers. And I think everyone kind of looks at the royalty, or especially the interviews, that we're all the same. And I think that's really wrong. Different groups have different skill sets. And I think that to say you should be choosing one royalty company over the other royalty company, I think it's wrong. I think investors have multiple ways to invest in the royalty and streaming space. There are excellent exploration, prospect generators like EMX Royalty. What they've done over there and Dave Cole done is fantastic. And that's something that people should have in their portfolio. Then you have other, different types along the way. People should do their homework and understand where their risk profile fits. For us, it's revenue generation. It really is bringing that cash flow, which we believe actually drives real value into Empress and will reflect in the share price. But it's leveraging off our skills as financiers and knowing the industry. And that's what investors really get by investing in Empress, is a diversified portfolio with people who have experience in the industry who understand this financial structuring.